Welcome back to U.S. Farm Report. Trusted, timely, tradition.
Thanks for joining us for the second half hour of U.S. Farm Report. I'm Clinton Griffiths, in for Tyne Morgan. Well, the last few weeks have been rather brutal for many of the commodity markets as grains, cotton, and others have seen a sell-off from historical highs. But is this evidence yet that inflation has peaked or that the economy is moving into a recession? Michelle Rook takes a closer look at this week's Farm Journal report.
Clinton, for several months, hedge funds bought commodities as a hedge against inflation, but the last few weeks they started a massive liquidation on recessionary fears tied to the Fed's aggressive rate hikes. So is the U.S. in a recession? And if it is, will funds continue to liquidate and pull down the commodity markets? I talked to some market and economic experts to get their take. Recently, the agricultural markets have been driven more by money flow at times than fundamentals. A J.P. Morgan Chase commodities strategist says about $15 billion moved out of commodity futures markets just during the week ending June 24th. This was the fourth straight week of outflows, bringing the total for the year to around $125 billion. That was a seasonal record that tops even 2020.
We're seeing the funds get out. The path of least resistance is down, and that means sell and kind of ignore everything else.
The macroeconomic picture spooked the hedge funds as the inflation bubble bursts and recessionary fears climb.
They just decided, I don't want to be long anymore. I think the recession fears are really starting to spike higher.
Does that fund, that money manager, does he want to throw money at something like that when there's probably something else that in his view is a safer, better place to ride out the recession in, like an interest-bearing instrument perhaps?
Fund liquidation has also pulled wheat prices down to pre-war levels.
And I think the worst of them all was, quite frankly, has been the last 2 weeks of the complete destruction of the wheat market. And wheat pretty much led this market to the upside, and it's now leading it to the downside.
So is speculative selling in commodities done? Maybe short term, but analysts say longer term, it may depend on future Fed action and recovery in the equity and energy sectors, even cryptocurrencies.
I'm worried that mismanagement is going to cause this recession to get quite a bit deeper, and that things like crude oil, which are just now breaking out to the downside, have a lot more downside pressure to go, and that's going to lean heavily on agricultural markets as well.
But the fear now is that the Fed pushes too hard, even as inflation starts to back down, and then we slow down the economy. And we've already seen indications that we are slowing the economic activity. And then you get into periods of extended recession potentially.
But is the U.S. in a recession? This week's Fed minutes indicate they're looking at further rate hikes this year to tame inflation and are optimistic they can do it without sending the economy into recession. But is it already too late?
We're either in a recession or we're very close to it. The Atlanta Federal Reserve announced just last week that we are in a recession. They said their indications, their readings are that quarter two GDP was negative, and that combined that with quarter one's GDP growth that was also negative. So those readings alone would tell you we are in a recession.
Other key indicators include equity indices moving into bear market territory and an inverted curve on treasuries.
The stock market is telling us, hey, this is not good. The bond market, as you said, negative yield curve. That's the short-term rates are higher than long-term rates. And of course, that's not good.
Plus, a sell-off in certain commodities generally provides an early clue.
Well, cotton and copper are two of those leading indicators, and they would tell you definitely we're contracting this economy. We're headed for a recession.
Goss doesn't think a recession will last long and agriculture will be more insulated. However, demand destruction is possible, especially if the dollar stays at 20-year highs.
A recession affects demand for everything potentially, and that includes food at both ends of the scale.
And what's going on there, Michelle, is the value of the dollar is going up, and particularly against the Japanese yen, even against the euro, the dollar is gaining strength, and that's not a good thing if you're trying to sell U.S. goods.
So does this mean an end to the bull market, or is it just taking a pause? And what will it take to bring speculative buying interest back into the commodities?
It might be that prices just get cheap enough where they look like a value buy again. It might be some macroeconomic event. It might be some weather event, something like that. But something's going to have to flip the switch.
So it'd have to be something big like QE or Russia or something around, crude oil going to 180 or something like that. But short of that, I just don't see how we get a rally other than one to sell.
Until then, some commodities like grains and cotton may have put in their highs for the year. With the Farm Journal report, I'm Michelle Ruck. As far as the Fed action, their June meeting minutes released on Wednesday indicated they're poised to raise rates in July by either 0.5 to 0.75%, and further action is appropriate if elevated inflation pressures were to persist.
All right, thanks, Michelle. Now stay with us. Michelle will continue that market conversation after the break as we have part 2 of our marketing roundtables. And later, the cave that inspired Mark Twain as seen by Andrew McCrae along the American countryside. U.S. Farm Report will be right back.
Registration is open for the 2022 Pro Farmer Crop Tour. Join our team as we gain insight on the 2022 growing season in person or online. Visit profarmercroptour.com/register to select the stop nearest you.